price in the even lower ISM that I think is to come over the next 9 months. What is also interesting to me is that the markets tend to bottom before the ISM does. So if we go back all the way to 1947, it actually bottomed in line. When we go back to 1974, it bottomed 3 months beforehand. And if we go back to 2018, it bottomed 9 months beforehand. So I can't be extremely bearish equities. I can imagine that there is some more downside to come, but I can't be very bearish equities. But there are other trades that interest me. Firstly, the cycle I think will be short and sharp, and therefore we will be looking for the upside in equities in the next 3 months or so. And I've been buying the growth end of tech because it's the most discounted, and I think that rates won't be rising. So let's go on to the next chart, which is the one that's really interesting, because I always say bonds are the truth. But interesting enough, the 10-year bond yield year on year versus the ISM is actually quite mispriced versus everything else. It's pricing the ISM over 60 when everything else is pricing it much lower. The NASDAQ's pricing it at 41, 42. Now, again, when we go back in history, we saw this happen before. It happened in 2001. The market mispriced bond yields and bond yields collapsed. So I'm very interested in what bond yields will do in all of this. And I'll come on to another chart in a sec that ties this all together. The following chart is the one that is keeping bond yields from falling is oil. Oil has remained elevated, and I'm looking for it to come lower. I understand the supply story, and we'll see the clip from Warren Pies later. But the supply story, I understand. It's not going away fast, but the demand story is probably worse than most people expect. And what's interesting is if I look at the year-on-year change in the dollar, which is blue, which is the DXY inverted, and the white, which is the price of oil, dollar and the oil are usually very correlated. Now, currently, they're not. Now, the DXY is pricing oil at $20, and oil is at $104. So it's telling you roughly the premium that's in for supply issues. It's telling you there's like $80 in the price. So I think that any positive news on the supply side brings oil lower, or any shock on the demand side brings oil sharply lower. So I'm kind of expecting oil to come back into the $80 to $60 range, which again, if you then look back, that would mean that inflation basically evaporates. The Fed, with the headline of oil coming low, it's the last shoe standing in all of the commodity markets. If that comes lower,